We are back at it again here with another video with the Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. Here we are with the SPY, the S&P 500 index, in a tight range here, trying to bounce off the support of 391 to 390 area and trying to get towards the resistance of 395 and continuing to reject it and coming back down. Now, within today's volatility early on in the pre-market, our SPY bot at 8:35 a.m. sent out a bull indicator, and from that moment forward, inflows had crossed over the midpoint, full strength towards the bell, inflow stayed above it, switched from red to green, and after the bell, full strength there on 42 vision, and call options went up 70% plus within minutes, guys. If you guys want to receive this clarity and edge of the charts, you can now gain access to it as well. The link is down below in the description to the 42 vision indicator, getting connected over to our bots and becoming part of our growing community of investors, receiving this clarity and edge by using these resources to maximize in either direction, whether stocks are going up or going down. So today we need to talk about what's going on here with the SPY as it approaches a pivotal support level, guys, where the bulls and bears are putting up a fight. We're below a psychological level, which is 400, which we're going to break down in today's video. And we're also going to take a look at the inflow versus outflow. But before we break it all down, I want to share with you guys the home run opportunities that were mentioned this morning over at the Discord. So the home run of the day was spectacular and beyond expectations. And if you guys want to know about these stocks early on in the pre-market and receive this edge and clarity over the charts, check out the link down below in the description to the Discord. And by joining, you'll become part of our growing community of investors, all looking to learn and grow together. So the home run of the day was from our Tesla bot. Our Tesla bot sent out a bear indicator at 9:50 a.m. And from that moment forward, the outflows crossed the midpoint to the downside. Pure weakness there on 42 vision. And put options went up 100% plus within an hour, guys. If you guys want to receive this clarity and edge of the charts, check out the link down below in the description to the Discord. We look forward to having you join us, and we strive for opportunities like these every single day. Let's jump into these charts. So here we are with the SPY, the S&P 500 index, as I stated earlier in the video, fighting here within this tight consolidation. And in yesterday's video, we broke down how I went from a full transition from the rip area to the dip area, which is bright green bars to white with red borders. Multiple dip areas have been hit, and the last time we had hit a dip area was way back here on November 29th before this rip area. And 42 vision allows us to see the dips to the rips, and white with red borders is what I like to call the dip area. Bright green bars is the rip area, and we've done a full transition to the downside as well from the rip area to the dip area. And we also use, in conjunction with 42 vision, our bull and bear indicators and inflow versus outflow, which I'm going to pull up here and you can now gain access to as well. The link is down below in the description to the 42 vision indicator, getting connected over to our bots and becoming part of our growing community of investors, all using these resources to maximize in either direction, whether stocks are going up or going down. And in today's video, I'm going to pull up the inflow versus outflow indicator, which adds that extra layer of confirmation and gives us that edge within the volatility. So here we are with the SPY, the S&P 500 index, fighting to stay above 390, fighting to stay above the next resistance, which is 393, and rejecting off of 395 being a pivotal area to go ahead and break above, right? You could see that rejection there in previous parts of yesterday and also the history of the chart way back here before it took off on November 30th and those inflows picked up. Now, today, as we speak, the outflows have lost traction, right? The inflows are dominating again. Even though there's outflows trying to build up here, it's still above the midpoint. So this is going to be crucial and critical going into tomorrow for this to stay above, because if it comes right back down, all of this strength here that's holding it up is because of all of these inflows and bringing themselves back up on the 30-minute. If it crosses down, that can then retest the support here and probably even lower areas, which is what we're going to talk about in today's video. So 400 was a key psychological level, right? We've talked about the speculation on that anything below it, a lot of people are anticipating that the bears are dominating, and anything above it means that the bulls are probably putting up a fight to push this up higher, right? That's the speculation, and that's the thought process. Now, right now, we're really close to a key level when we zoom out and you look at this from the 1 hour on the 390 area, right? That is the support here since November 17th, since it ran on November 9th from way down here at 374 all the way up to 400, came back down, and since then, the stock market has been fighting and volatile above it. The question mark is, could it actually bring itself back up and create that double bottom effect that I was actually describing and showing in yesterday's video, right? Coming back down and then popping back up. It's going to be crucial though, because these outflows have been dominating since way back here on December 5th, and the stock market has fallen from 403 all the way down to 390, and today the inflows were trying to come to the midpoint, and what happened? It has actually rejected, and it's red. This is based off of the 1 hour chart. We need to watch this very carefully. It does not guarantee or mean that the weakness will continue, because we also have the smaller time frames with much more volatility. But this 1 hour rejection is to not be ignored. I'm going to be watching that going into tomorrow, and we have no bull indicator just yet, right? We're still under a bear indicator since way up here at 405 since December 2nd. We've hit multiple dip areas, and it's trying to find support. We need to see 390, 400 was important, but 390 is even more critical of how much more weakness we could see, or if it could bounce from here and find a bottom, as they like to call it, right? It's all speculation right now. We need to watch it carefully, and it's actually ranging sideways. If not, the markets would be moving in either direction in a much more significant way. There's a fight here going on, right, between the bulls and bears. The bulls are trying to push it back up. The bears are trying to tear it down. And right now, it's just consolidating. If not, like I stated, we would see extreme moves to the downside or back up to the upside. Also, it's going to take some news, and the markets are waiting for CPI data. That's going to be critical whether the markets find strength here or we go into further weakness. Now let's zoom in here back to the 30-minute. I'm going to be watching going into tomorrow if these inflows can continue to pull upwards away from the midpoint here and switch from red to green again, start reflecting into the chart, breaking through resistance, and also in the possibility of the move up, getting a bull indicator that cancels out this bear indicator. And the same thing here for the 15-minute chart, guys. As it's fighting here within the volatility, I want to see these inflows hold. I want to see it push up, go higher. It did a full transition today from the pre-market dip to the rip here after the bell, from white with red borders to bright green. But I want to see this go back into dark green bars and continue towards those bright green bars. And if that could start to reflect, not just here on the 15-minute, but into the 30-minute and roll over into the 1 hour as well, and start canceling those bear indicators, followed by bull indicators, and full strength to the upside with these inflows holding up. Now to the downside, I'm going to be watching if it breaks through the 390 support, and if that gets broken through, the next support is 385, then comes 380, and then also how far does it react to the downside, crossing the midpoint here on the 30-minute, and if this 1 hour continues to pull back significantly to the downside, as it's only right now minus 1.3, and earlier today in the pre-market it was as low as -6, right? So I'm going to be watching that. It has room to go lower, not guaranteed to, but not to be overlooked. Now if we go to the downside, like I stated, 385, then 380, and 390 is the first pivotal resistance and support there, right? Now to the upside, the resistance level that we want to turn into a support is 395, and then above that comes 400, guys. 400 will be critical. It's that main psychological level, and the longer we stay below it, the more the markets are going to feel that the bears are taking over, and the moment we're back above it, the markets are going to feel euphoric and believe that the bulls have taken over. It's going to be a very volatile next few days until CPI data. We'll see what goes on, and this is my opinion and perspective alone, not financial advice. The volatility isn't here to stay just this week or until CPI. I think it's here to stay for quite some time. I've been saying that all year, and I'm going ahead and maximizing within the moves and whatever the charts present us daily. As always, thank you guys so much for watching, and let's make some money.